Welcome to the Hamsi Analytics Daily Market Commentary. I'm Paulo Navarro. Today is Thursday, September 20, 2012. For the market internals, the New York Stock Exchange advanced decline differential closed at negative 652. Nasdaq advanced decline differential closed at negative 609. We had 26 new 52-week highs for the S&P 500 and 2 new 52-week lows for the S&P 500. For the volatility, there were 501,000 contracts traded on the VIX today, with 42 million in total premiums paid. For the dollar-weighted put-call ratio in October, we saw a 0.63 reading, with 45% of the total premiums paid. In November, a 1.23, with 22% of the total premiums paid, and in December, a 0.64, with 19% of the total premiums paid. All of these were neutral readings here on the dollar-weighted put-call ratio. Here we have the daily chart for SPX. We have another flat day here in the market, but pretty much we came back after selling off in the morning, and we're gonna look at the intraday action. We finished at the same levels, 1460, nothing happening here, and we continue to be on the +1, +2 sigma channel. Slope for CI is flat now, not good here for the CI on the market on SPX. Maybe we're starting to take here a turning point to the downside. Maybe you're looking for this 1429 level. For the intraday action, here we have the 60-minute chart, and we could see here we sold off in the mornings, futures were down, we opened down, and we started coming back, filled the gap, and finished basically even from where we started and ended yesterday. Not much happening here. Intraday action, we talked about breaking this pivot on the morning, but there was no follow through. We wanted to see some confirmation here. There was nothing, so we bounced back up, finishing flat for the day. Interesting, if we go here to the moving averages, we go to the daily chart. We stopped at the 10-day moving average. You could see here pretty quickly on the 10-day moving average, that was almost the low for the day, a handle or so difference, and we bounced off that level after that. We continue to see that bull flag pattern here we have this huge run up, and now we're starting to drift lower, maybe for the 1429 level. Some good resistance here, and maybe then try to take out the highs. Let's go here for SPY. Here we have the SPY daily chart, 60-minute chart, sorry. Same, we broke the weekly pivot, but after the second hour we took that away and just started drifting higher, closing flat for the day, not much happening. Pretty much the same as we're looking on the SPX index. We're looking maybe for a pullback, 144. That's gonna be an interesting number here to watch, and then maybe start going higher. Look for that 149 level, so maybe a little pullback of this high and then a bigger rally. For the Qs did basically the same. We stayed on the range. We did not touch weekly pivot. We talked about yesterday being between weekly resistance number 1 and weekly pivot. Nothing changed so far, so here we have the same targets. We are looking at options expiration week. Not much happening here on this week. Tomorrow, Friday, of options expiration. Probably it's not gonna be a big day. Maybe if we get some news or something, but most of the equities will be boxed in, which means that they will be trying to go to a certain strike price, and they will try not to move from that one. Here we're looking maybe for a pullback to the 69 level, even maybe go lower to this previous high, 68, and then just rally maybe back to 75 longer term. This is the daily chart. You can see how the pattern is playing out. We make some corrections, try to take the top, make a little correction higher, then the same pattern occurred during the summer. Maybe we're ready for another pullback and even go higher. That's what it's looking like for longer term. Let's go here back and let's look at the IWM. IWM index Russell 2000 ETF down 0.4% for the day. It clearly broke weekly pivot, confirm the break on the open, and we try to go for weekly resistance. Support number 1, no go. Try then to go back to the 85.72 level. That's gonna be a target. Pretty much we're gonna be range bound for tomorrow and going into next week. We hope volume and some volatility comes back into the market. But as for the targets here, we're looking for coming back to the 0 sigma 83.30. That's gonna be a pretty good pullback here. Maybe go to 83.30. I'm looking for the 82.5 level. That was a critical pattern here of these highs. I'm looking for an 82.5 retest. If we do not fail, go back, maybe make new highs here. In case we do fail this 82.5 level, we will go to this 200-day moving average fairly quickly. So very important level at the 82.5. Let's go to the moving averages chart, and you can see here, this is the levels I'm talking about. We have this high here. We took it away for a new high here, but the levels 82.5 are around pretty much here. That was the neckline for the inverse head and shoulders we talked about last month, and I wanted to see maybe come back here, test this average, and go back up. That will be a very bullish signal here in case we do find some support at this 82.5 level. Let's go here, let's go back to this chart, and let's look at gold, GLD. Start with the daily chart for GLD. Here we have it. Gold today down 0.16%. We continue to be on positive 1, positive 2 sigma channel, and taking somewhat of a breather after we had here Mario Draghi news that he would do whatever it takes to save the euro. Broke the 200-day moving average, broke the range. After that, here we have Bernanke saying he's gonna do more quantitative easing. No, sorry, here we have Mario Draghi coming out with his speech, and then we have Ben Bernanke saying that he will buy unlimited bonds, basically printing money. Now gold trying to take some of a breather, maybe stay, consolidate around this period, and then we're looking for 74.50. That's gonna be our next target on the upside, and maybe a little pullback to 66 to rally even further. On the moving averages, here's what we're watching. We have some resistance here at 74, pretty much in line with the levels we're watching of 74.50, and then this previous high of 75.25. Those are gonna be pretty important highs here to take out. In case we do, maybe it takes a little more, couple of days, with 1 week more, maybe for the next leg up. That's what we're watching. Maybe a pullback. We don't want to break this 10-day moving averages. It has hold once, twice, 3 times, 4 times, 5 times, 6 times. Very important resistance here. But as you can see, it has been, the slope is very high. We may be getting some clear to a break here. Maybe take a breather to the 166 level we talked about, and try to reach this couple of highs. That's gonna be target number 1, 2, and then long term 3. Those are the targets we're looking for long term in GLD. Let's go to the chart here and look for VIX. VIX, we have 1.44% up for the day. Not much happening, reversing from the highs, but again we want to see VIX start to bottom out here for the 18.5 level, and then come back higher. This would be the pullback we've been talking about, and maybe then the rally we want for the market that would bring the VIX again down to 14. Another fail of the 200-day moving average. We have a special offer by TradeStation. Get your HAMC Analytics proprietary indicator paid by TradeStation. Contact Active Traders office in Chicago, Peter Albino, at the number listed below. Have a great day, and I'll talk to you tomorrow.